Okay, hello everyone. So we will correct another exercise. So in this exercise, the name of the topic is JV's company, right? So we look at what this company do during the 18th of 2018. For it's the first year in operation, right? So now we have a seven transaction of the company in the how to say in the first year of transaction, right? So you can look from here that is a very how to say common transaction, right? It's not much difficult, not much complicated. Okay, so but what in be the job, right? So you have for each transaction you have to show the effect of this transaction on the accounting equation. It means that asset equal liability plus the owner equity. Here we call it the first transaction. So for example, if you look at the first transaction, issue the stock to the how to say for the investor for cash here, right? So you can see that this transaction already how to say recorded for you in this line. Okay, look at this one. For example, here you issue the stock, so you increase your cash asset, right? So you increase your cash, right? So here we have a cash account increase. Huh? However, you also increase the owner's equity. So you can see that two sides of the accounting equation is equal because increase for 35,000 by cash, right? So now the job is to show the effect and include the dollars amount of increases and decreases, right? So the first done already did it for you, and after you entering all of the event, you have to calculate the total amount of asset here, right? You have to calculate the total amount of asset here and total amount of the liability here and total amount of the owner equity. Right. So that's your job now. Okay, so whenever you have an exam, you have to how to say to look at the question very detailed and work on this, right? Okay, so now we will look at the correction of this exercise. Okay, just very simple. We look at the transaction number one first, right? You know that for every transaction, try to do the two steps. The first step we call is basic analysis. It means that you increase which account will be increase or decrease, right? Increase or decrease. So here for this transaction, you issue stock to investor. It means that your assets cash already increased for 35,000, right? And the owner equity account, or here we can call the name of this account is owner's capital, also increase the same amount of 35,000, right? So this is the first step. You know that there's a two account increase. Here is a cash and owner's capital. The second step now you have to update this information in the accounting equation. So we have a step 2 here, right? So we write asset equal liability plus owner equity. We have a cash increase the amount of 35,000. We have a owner's capital increase of 35,000. So you can see from here that there's nothing, there's no change in the liability. Right, so that's the reason why the two sides of accounting equation is how to say equal. So we have done for the first transaction, and now we will go for the second transaction, right? Okay. Okay, let's look the second transaction. For the second transaction, the companies borrowed 15,000 by cash from the borrower, from the lender. So always the first step we have a two accounts analysis. When you borrow the money from company, it means that your assets cash increase because you receive the cash. However, you also increase your liability as account here is the loan, so increase the same amount, right? So that is the first step. For the second step, you will apply this in the accounting equation. For this accounting equation, you know that there's a cash increase. You move here as a loan increase, so the two sides increase the same amount. So it means that you have done a good job, right? There's no effect on the owner's equity, right? There's no effect, okay? So this is the transaction number 2. Okay, so we will continue with the next transaction. So we have a 7 transaction if I'm not wrong. The company provided the service and received a 22,000 cash from client, right? So now the first step we will analyze now which account will be involved in this transaction. When you provide the service to client and you receive the revenue, and if the client paid you immediately, it means that your receive the cash, your cash will be increased 22,000, and the revenue account also increase 22,000. So you know that the revenue account is on the owner equity. So that's the reason why we can continue with the second step of the accounting equation. So you put here cash down of the asset account, right? And you put the liability. There's nothing changed because no money borrowed from anyone, no liability. However, you have the revenue increase. It means that your owner's equities increase for the same amount of the cash increase, right? So if you look at this transaction, right, you can see that there's a two sides of the accounting equation now equal, right? Because increase both asset and owner's equity, right? Okay, so far so good, right? And now we look at the another transaction. For this transaction, you have to pay attention because it's a paid expenses, right? So the first step, basic analysis, you paying expenses by cash, right? By cash. So it means that you reduce the cash asset of the company for the amount of 18,000. So you can see from here, the cash amount decrease, right? However, you now your expense increase. Be careful. Your expense increase. It means that you spend for 18,000. But remember that for the accounting equation, the owner equity, right? There's of course, we have income, right? We have income return earning, right? We have a return earning here. For example, here if I can write for you, right? The return earning, right? So equal the, how to say, equal the income, net income, right? Net income minus the dividend, right? Okay, but what is the relationship between the net income and dividend? So net income equal revenue minus the expense, right? So in this example, you can see that your expense here increase, right? So your expense increase, it means that your, how to say, your owner's equity should be decreased, right? So you have to pay very attention here because there's an increase in expense but decrease in the owner equity. So I think that this is very important that you have to take note because if not you will, how to say, mm, make mistake about this one, right? Because always remember that the return earning should be equal net income minus the dividend. In that case, we don't have any dividend, right? Okay. So now look at another transaction. We mentioned about the paid 12,000 cash for land. So what does it mean? It means that the company now the paying cash for purchasing land should be reduced. The first one is a cash asset of the company, right? So you see from here that we pay land, so we have a cash asset decrease, right? However, on the other hand, right, the company the asset account of land increase for the same amount. So it means that if you take the amount of cash and the amount of land, it means that the asset the value is unchangeable. So for this side, we have unchangeable zero. So it means that there's no effect on liability, no effect on owner's equity, right? So remember this is a transaction, right? There's no effect on the total asset amount. However, you have an effect on each individual account of cash and land, right? Okay, so I think that this is a transaction we always have on the exam. So hope that will be a help. Okay, finally we go to the last transaction. The company repaid 2,000 of loan listed in item 2, right? So it means what happened? Remember that the companies borrows how much now in the transaction number 2? The company borrows 15,000 of cash from the lender, and now in this transaction the companies repaid the loan. So it means that here if you repay the loan for the you decrease your cash, right? Decrease your cash account. However, you also decrease your liability with the how to say we call here the loan from the lender of the same amount. So if you use the accounting the basic equation, you have the first side the asset cash decrease, and the second side the liabilities the account of loan also decrease the same amount. There's no effect is the owner equity, right? So you did done very good job if you check, always check the accounting equation. Okay, finally here's what we did for our job now, right? So you can see that if you record all of the transaction, 7 transaction, so you put all of the asset here, right? All of asset here by each transaction increase or decrease, and you can see the total balance of the company after 7 transaction should be 50,000 for asset. For the liability at the transaction from the beginning there's 0, but by end there's an increase of the 13,000, right? The owner equity, you can see there is a changing in the owner equity. At the beginning they invest 35,000, and after that they receive the revenue 22,000. However, they also paid the how to say the dividends, they have to pay the another. So that's the reason why we have this transaction, right? So, and finally the total amount is 37,000, right? So I hope that you will see it very well. Okay. Okay, this is a dividend. Okay, so that is the final answer for our uh, exercise number 4. We have in this exercise to summarize. We have to analyze each transaction have an effect to the accounting equation asset equal liability and owner equity, and we update the change in the increase or decrease on the accounting equation each time, and after that you have to make the total balance uh, of the how to say of the asset and liability owner equity at the end of your accounting period. I hope that this will be a help, and if you have any question, please do not hesitate to contact me, and see you in the next video. Bye now for now.